Bitcoin's fate after the debate. What's it going to take to break this range, for crying out loud? Hey guys, it's Keith Allen. Don't know if you put yourself through watching the debate last night or not. There was some entertainment value there for sure. I guess I'm not surprised. I'm not surprised at anything I see online anymore. But depending on what camp you live in, where your bias is, just like I guess with trading, you have different perspectives of what happened last night. And I'm not even going to draw that line here. All I can say is there's different perspectives on who won, but to me, I know who lost, and that's the American people. It's just an ugly kind of situation that we're in, and that these are our choices here at this stage in the game. But all things considered, in my opinion, there was a clear-cut winner last night. But that's neither here nor there. What I want to do today is see if we can figure out how this may have influenced Bitcoin price action in the past 24 hours. Well, not even 24 hours. And what else could be next. Of course, we also had some new economic data that came out this morning that triggered a little bit of volatility. And so these are kind of the things that I'm going to focus on here in this analysis today. We'll look at Bitcoin order book and order flow analysis and FireCharts, of course, and look at some of the other factors here, because these events, the debate, the economic data, this is all kind of creating some intra-day, intra-week, intra-month volatility. But really what matters, I think, is at this stage, I think we have to zoom out a bit. Before we climb in, real quickly, if you like the streams, please do me a favor and smash every single button. And especially make sure that you hit that it's over there, the subscribe button up there. So you don't miss any of these streams, and by all means, share a comment. On that note, the live chat is open here today. So if you want to climb in, go ahead and do so. Alexander leading off with a very astute observation. No Bitcoin in the debate last night. Yeah, I don't think that this is a nationwide with all of the. Listen, I obviously love crypto and want a candidate who is going to embrace it. But I don't think in the grand scheme of things that this is anywhere near the top of the most important issues that the nation and the world are concerned about. And so not surprised that was not in the lineup last night. Crackdown, smash the button. Thanks, dude. I appreciate it. And I hope everybody else will do the same and help us keep this thing growing. So let's go ahead and climb in. No secret that the crypto market largely pro-Trump, because back in, I don't know, a month or so ago, he, made some claims at the Bitcoin 2024 conference. And I can only listen to a little bit of it. And from what I listened to, yes, he said he was going to create a reserve of Bitcoin, and that he wasn't going to sell any of the seized coin and all of that. And as he continued to speak about it, what I gathered from it was that he really does not know what the fuck he is talking about. So, I think he's just will continue to say whatever he thinks he needs to say to get votes and get donations. Crackdown with another great observation. Yeah. Does it really matter? They're both liars. Yeah, that's politics for us, right? It's what we got. And so I think that either of them are likely to embrace crypto in some way, shape, or form. This horse has left the barn and it's not going back in. The genie has left the bottle. It's not going back in. We still need some definition in the regulatory side of things. And we obviously want to be that as as limited as it could possibly be, I guess. So, looking at how I didn't really know whether to expect the debate to influence price a whole lot or not, because it wasn't a topic, but perhaps because the crypto crypto constituents love them some Trump. we did see some price movement, and I'm gonna start here, do something I don't normally do, and we're gonna look at a low time frame chart to really kind of track exactly when things started breaking down last night on the Bitcoin chart. Here we go. We're on the 5 minute chart here. That debate started at 9 p.m. my time last night, Eastern time. And as you can see at 9 p.m., let's see, this is straight up at 9 p.m. Things got started. We had a little spike here. And then at 9:15, things started breaking down and cascaded a bit. So, how far did it actually break down? But this is about the time that it didn't take long for Harris to get under Trump's skin to start pushing his buttons. She knew exactly what to do. Kind of predictable guy, not hard, right? And so, that was 2.75% down last night. And then we saw a bit of a recovery this morning. And then we had, let me put that one on hold. And then we had our economic numbers come out this morning, and that was 8:30 a.m. my time. And what did we get? We got a little fake out. We got a little dump. We got a little pump. We got a bigger dump, and when we got a bigger pump. So what is this all? What does this all mean, right? Well, I'll tell you, it means it's getting harder to trade. It's getting harder to read what your what these what the reactions are going to be to this data as it comes out. And so at that point, I kind of want to zoom out a little bit. And I think that makes it easier in this market, in this situation. Crack down with another comment here. What's you got here? It's crazy for those of us who aren't Americans how much our day too can also depend on decisions that take place in the U.S. Yes, we understand that what happens here has far-reaching implications. And that's why the U.S. is a world power, and that's why Russia and China and North Korea and Iran are trying to knock us off the top, and we understand that. That's unfortunately, all is fair in love and war, and unfortunately, there are wars, and hopefully, those are things that whomever makes it into office can get under control. So let's stop focusing on the politics and start focusing on the price action, because again, I think this stuff is creating some the volatility is going to be there, and this stuff is creating kind of some intraday, intra-month volatility, and we really just need to know what's it going to take to break out. What are the barriers to either breaking out or breaking down, right? So now let's zoom back out to at least a daily chart, and we can see that this red box, for anybody who's followed along for a while, recognizes this red box as an area of prior consolidation and importance, historical significance dating back to the 2021 mid-cycle top, which is right here, and then ultimately the 2021 top. And so the fact that we have fallen through this range a bit was certainly not a sign of strength, but we are retesting. We are at the moment back in it. And so, we've had this lower low here at about 49.5, depending on what exchange you're on. And was expecting that to actually retest at some point in time, and it still might. But worth noting, as I pointed out yesterday in the Blockchain Banter show, that this actually, wicks don't really tell an accurate story, and line charts, I think, are more accurate. And so I've been looking for a double bottom here, which is something we discussed when we talked about the death crosses and the halving. I mean, the death crosses and the golden cross. And so, which we've seen on different time frames, right? We saw all the death crosses on the D chart, and we've seen the golden cross here happening on the weekly chart. And so, yes, I was looking for a double bottom here. Didn't happen to the wick, at least not yet. But what we do have is support off of the 50-week moving average with a couple of retests. We didn't quite get to it today. I had hoped that we would, but it didn't. But it didn't. It didn't quite happen. Nonetheless, like I said, if we look at this on the candle chart, you can see that it actually did create a double bottom here. So with that, we can probably just do this number right here, right? Boom, there it is. So we got that going for us, which is nice. Now, in terms of where we go from here, the ranges that I'm looking at, I'll switch this one back to candles for us. The range that we're looking at means I see, you can see we have a lot of technical resistance here with all of these daily moving averages, right? And they're certainly in play with 59K being the nearest technical resistance. And if we look at fire charts, we'll see that we actually are approaching that range here now, where some of the resistance that was there has moved out of place. So this looks like it's getting a little bit easier to penetrate here. But we do, of course, have resistance all the way up, much higher, obviously. Let's zoom out a little bit and see if we can gain some perspective here. As you can see from this 58K level, from where we are actually up to about 60,500, we do have a cluster of ask liquidity here that is serving as physical liquidity based resistance that is well correlated with the technical resistance we see here in the chart. And if we zoom out to the weekly, this to me looks like where the real boundaries are on this narrower range. If we want to open it up at the macro level, the range, up here at this all-time high, down to this swing low. But that's a very broad range where we're actively trading right now between the 50-week moving average and this green 21-week moving average up here. I think these are actually kind of the boundaries at this stage. And so zooming out to the weekly, this puts technical resistance here at about 62,750 up to this 65K range, right? You can see the mid-cycle top is just below 65K, and this is a very important level here, in my opinion. We have the all-time high. We have the 2021 top, which has really been difficult for Bitcoin to break through. We've had dozens of interactions with this level that have not been sustainable so far. And so that's something that we're watching, but we can't get to that until we can clear some of these other hurdles. And it really is going to be a level by level game, I think. And so to the upside, what I'm looking for, again, we'll look at this weekly chart, zooming out a bit to try and I don't know, mitigate or mute some of the volatility that we're seeing here, and not get, so we don't get shaken out, and focus on what's happening in this range here. With these, let's say that these are the boundaries. Whatever happens in between here is really just noise. It's intraday or intra-week or intra-month volatility, whatever you want to call it. It doesn't really matter all that much. When we start breaking these levels, then we have things to think about, right? If we break this level, then obviously we can see where we have technical support around this trend line and this 48K range. And of course, if we break deeper than that, then we start looking at prior consolidation levels. Breaking the trend line, in my opinion, would be a very bad thing, and would likely mean the end of this beautiful run that we've had since before the beginning of the year. And so these are the boundaries that I am currently focused on. Now, some other things that might influence what's going on and might influence the volatility within the range, and possibly even influence a break of the range, either a breakdown or a breakout. Of course, we have an FOMC meeting coming up next week on the 18th. And as it stands, after this morning's economic data, we did see a little bit of a change in the in the perception of where things will go. How did this all just turn into the whole world? I just want to look at um, what we saw here today. Let's clear this and select that one more time and show you what today's data looked like in case you missed it. Core inflation year over year at 3.2%. That's unchanged. CPI, seasonally adjusted. You can see the numbers right here. You can do that research for yourself. However you interpret it, doesn't really matter. It's how the market interprets it. And what the market did was, what's the term I'm looking for? Oh, it fucked with people. That's what happened. Really a dump and a pump and a, just messy stuff, right? But with this came some change in the outlook from the market. Rate cuts obviously baked in here towards the end of the month here. Actually, next week, I should say, as we have the FOMC meeting on the 17th and 18th, and the announcement on the 18th. This was much closer to 50-50 in terms of whether it would be a 25 basis point or a 50 basis point cut. Well, 44-56 anyways, right? And then earlier in the month, at the beginning in August, it was almost 50-50. It's now looking very heavily like a quarter point is what the market is feeling at this point. And I've been saying that all along, that I would rather see a quarter point cut than a 50 basis point cut, because I think the latter, the larger cut, the more aggressive jump into this might concern the market a bit. That there is, I mean, we know the concern has been there about a hard landing and a deep recession. So I think smaller, more methodical cuts, really the outlook of that is at least the optics of that are better than big sweeping aggressive cuts. And so this opens the door to a couple of things that I have been seeing a lot across social media platforms. And two things, actually. One is that September's a bad month. September's always down, the September slump, whatever you want to call it. And the other is that the market always responds negatively to rate cuts. And those things happen a lot of times, but it's certainly not an always thing. And this is where I will repeat the statement: verify, don't trust. Don't even take my word for it. I'm going to show you the charts, but don't even take my word for it. See for yourself so you can arm yourself with the knowledge, right? And let's start, I guess, with a look at let's go back to candles for this, with a look at the monthly chart and see what has happened in previous Septembers. This was something else we talked about the other day in BitBreak. So, and I didn't make it to put these in every month. So let's see, June, July, September. First one was a red month, minus 3%. No big deal there. Look what happened afterwards. Then we go to 2011, another red September, 37%. That was a big dump. No question about it. Then we go to 2012, and we had a green September, 22% to the upside, by the way. And then we go to 2013, another green month, actually relatively flat, but still closed green, just a little more than 0.5% up. 2014 was red, down 20%. 2015, green, marginal, up a couple of points. 2016, green, up 6.25. 2017, red, minus 8.5%. 2018, red, minus 6.5%. 2019, red. So there's 3 consecutive reds. That's where maybe some of this perception about the September slump comes from people who just have not been watching the market that long, right? They've only been in the last few years, and that's what they know. Well, I don't know. I don't think that's a safe. I don't even know that that's safe analysis. Let's keep going. 2020 red minus 7.5%. 2021 red minus 7%. 2022 also red. 2023, there's a green one, up 4%. So, the moral of the story here is they aren't all red. Yes, there have been a lot of them, but there have also been several that are green. So you can't say with any certainty that it's always the same, that it's always down. Likewise, another thing we hear a lot is that rates, uh, when rate cuts are made, they tend to dump the market. And here's a look at um, the S&P 500. Bitcoin doesn't have enough history here to really gather anything great from it. I can overlay the Bitcoin chart in here in purple, but um, there's very little history of rate cuts while Bitcoin in Bitcoin's tender era. And so we look at the S&P 500. The only rate cuts that we've seen in the Bitcoin era, well, that was back in 2019, and then obviously we saw more after the COVID situation, and that COVID situation kind of an outlier. So here's what we know: we know that the Fed tends to cut rates when unemployment is on the rise. Here's a big giant spike here from COVID. That's a bit of an outlier. But if we look back in history and we can scroll all the way back to the beginning of time here, I've got this since 1957 when we started seeing cuts. Green lines, the green vertical lines are periods when rate cuts led to an upswing in the market. Red lines are a downswing, a downtrend in the market, and blue is kind of sideways. And so, like in this case, you can see we chopped for a little bit, went down a touch, and then resolved to the upside. Dump and then resolved to the upside. So basically, the short version of this, the TLDR version of this, is that about, and I didn't mark every single minute cut, just kind of the first one in the sequence. The moral of the story here is that they aren't all going red. In fact, 70% of them went green. And so we actually might see this this very well could be seen as a buy the rumor, sell the news event. But I think that how the market ultimately responds depends on the ultimate outlook for the economy, the U.S. economy, namely. And so if it looks like we're navigating into a soft landing or a softish landing, then the market's going to respond well to that. If it looks like we are in a hard landing, and this debate is happening every single day, by the way, and it has been since COVID, that's gonna change the trajectory. And how the presidential election resolves will probably change that trajectory a little bit, at least in the initial phases for the first few cuts. The election, of course, in November. The president-elect, whomever it is, will take office in January. And so we could see some continued ranging until the market and the economy have settled down into whomever wins the election and is going to take office. And so I just wanted to debunk the theory that it's always red when we go through periods of rate cuts. It's not always the case. So a lot of other variables that we need to look at. Speaking of variables, another one is ETF flow. And ETFs have had a long run here of red days, of outflows here since the last week in August or so. A bit of an offloading. There was not really there aren't a lot of days where BlackRock sold. In fact, I'll expand this chart and we can look at the entire history of Bitcoin ETFs dating back to January 11th when they first started, right? And we know that Grayscale has just had this massive bleed of outflows. But you can look and see how few days BlackRock, that's IBIT here, how few days BlackRock has actually sold anything. And I don't think that this, as a whole, if we generalize this class of ETF investors, I'm not going to say that they're necessarily the smart money. In my opinion, if they were smart money, they'd actually be owning Bitcoin instead of the ETF. I understand why some people might have interest in an ETF, and I understand how it's getting leveraged into different portfolio products. But as you can see, they've been aggressive buyers since day one, with very, very few days that were flat or red. Even on the days that the rest of the market was red, um, they were they were buying, or they were flat. This was largely considered a rebalancing event. Um, we then continued, and they were continuing to buy. Even on days when others were selling, they were still buying at BlackRock. And so, even on this most recent run, we had several days, right? So this was like over a period of like 2 weeks, right, where a lot of sell pressure on ETFs from all of pretty much all of the other entities, and only 2 days of selling out of BlackRock, as well as the others were just flat. Okay, so I think on this past dip is really about the first time that their conviction has really been tested in terms of coming in to their entry level for a lot of them, right? Some bought early back in January, probably doing very well. But those that came on later, probably in that mid to upper 50s range of their price point. So we saw some selling over the past 2 weeks, and the buying began again this week. So not BlackRock, by the way, on Monday, but and yesterday they were flat, but the whole crew, including well, this is now the Grayscale. This is their mini. Okay, so this is the main Grayscale product, the formerly the Grayscale Bitcoin Trust that was converted into an ETF. High fees of 2.5% on this one, and then they came out with this Bitcoin Mini ETF with low fees, like 0.15%. Cheapest. They have the highest and the cheapest fee structure in the game. And that was to kind of mitigate some of this bleeding here, hoping that they could maybe get some people to, rather than just exit and go someplace else like BlackRock, to maybe come into their other product so that they could keep those assets under management, which is where they generate the revenue from. So that has not been huge. Nonetheless, BlackRock is now the largest. In fact, they've Grayscale has bled almost as much as BlackRock has bought, and you have to wonder how much of this was customers that fled Grayscale to come over to BlackRock. Whatever the case, they're back to buying at these levels, so that's interesting to see. And how this plays into the longer term narrative is simply that this could create more demand over time in this market for Bitcoin, and that's what I'm banking on in terms of why I even pay attention to these ETF flows, because ultimately this does mean demand, because the entities, in this case, the BlackRocks and the Grayscales of the world and the Fidelities, have to actually buy that Bitcoin to back these ETFs. So that's basically, and pardon the pun, the long and short of it. I'll leave you with a parting shot here of the order book, and you can see we have a new block of bid liquidity showing up here at 46K. That's interesting to see because, well, actually, you know what? Let's see if this correlates with where the trend line is, because when we were looking at the trend line back here a couple of weeks ago, we were down in this 44, 45K range, and now where it sits is roughly at that 46K level. So this is basically, and this, I love it when the liquidity matches the TA. This is basically showing us that somebody here is trying to defend the trend line at 46K. Now, does it mean that we're going to go there? We might. We certainly could. And in my opinion, there's not a better place to really start the next leg up from than here. And that may take some time to get there, right? But this would be a super solid foundational point. It would mean breaking through this. This breakdown would be ugly. Not a lot of people want to make this elevator trip down because that is, let's see how far that is from here. Current price is another almost 20%, right? So that's scary for a lot of people, especially those that are leveraged, but would be a fantastic launch pad, in my opinion. Now, if we break down from there, that's concerning to me. This 200-week moving average is really a last line of defense, in my opinion, at 39K. And, if we lose this range, then, in my opinion, the market is cooked. And so that would lead us to a revisit of this 25 to 30K range, and no telling how long it would take us to climb out of that from there. I would be okay with wicking through this, and we have a quick recovery like we had when we tested this 50-week moving average. I would not be thrilled to see things erode from here, grind down to the 200-week, and then potentially break through that. That would be that's a tough ride. So here's kind of my invalidation for where the trend is now. And again, watching these levels very closely, because if we lose this, chances are this comes into play. Going to leave it right there with that one. Again, guys, if you like the content, do me a favor, smash the buttons. Make sure you hit the subscribe button up there at the top, and share a comment. I enjoy having you guys follow along, and I always enjoy reading your comments, and I engage with each and every one of them. Thanks again, guys. Sorry it took so long to get today's analysis out. It's been a busy day. In the meantime, I'll keep an eye on things. And if I see anything developing that looks significant, I will do my best to chime in and give you guys an update. Have a good one, guys. And as always, trade safe, my friends.